Hello there everyone, in today's video we're going to take a look at tax around company cars and vans. Alright, so what are the implications of having a company vehicle tax-wise from both the company's perspective and the individual, the director, shareholder who drives the car? Let's dive straight in. So, first of all, electric car. Electric car, if you buy or acquire on HP, you get 100% relief in year one of a new electric car. So let's just say the electric car costs £50,000. It's a brand new electric car and you buy it outright in your limited company. That 50,000 will come off your taxable profits. So even though you're going to put it on the balance sheet of your accounts, it's not going to touch your profit and loss account other than by some depreciation. From a tax perspective, the tax man lets you have 100% write-off. So even if you depreciate it in your books over, say, 5 years, that's stripped out when it comes to working out your corporation tax, and instead, the tax man gives you 100% relief in year one, straight off your taxable profits. If it's a second-hand electric car that you are acquiring, then it's only 18%. So 18% in the first year, then in the second year, it'll be 18% of 100 minus 18, which is 82, and then 18% of 64, and so on and so forth. But it's over time, it's over several years if it's second-hand electric. So, what about the income tax implications if you're the director driving this car? So, the benefit in kind. So we'd work out 2% of the list price. Now, this is current tax year 24-25. These are due to change in the next few years, but right now 2% of the list price. So on that example, if the car costs 50 grand, that was its list price new, so 2% of that is £1,000. So on this guy's tax return, in terms of the pecking order, you always start off with salary and then you add on benefits and various things, and then dividends come last. So assuming he's let's say he's taking out the 12,500 salary, which is covered by his personal allowance, then that £1,000 benefit in kind, taxed at 20%. So he's going to pay £200 of income tax for the privilege of driving the company electric car. So it's pretty good. That's the best you can do from a tax perspective, is get an electric car. What if electric car don't float your boat too much, but instead you quite like the look of these hybrids? You like to drive one of those? Great. Okay, so you get a hybrid. HMRC say that's fine. Now, the rate of tax relief when you buy this hybrid, 18% per year of the list price. It's the same as having a second-hand electric car. So you get 18% each year on a depreciating basis, what we call a reducing balance basis, going forward. What if you are, again, from an income tax perspective, you are the driver of that car? What does it mean for your personal tax? Well, it all depends on the electric range of the hybrid car. So, again, it's based, you benefiting kind based on the list price, the percentage of the list price, and it can be between 2 and 14%. So remember, for electric car, the best you can get 2%. Hybrid, again, you can get 2% is the best if the electric range of the hybrid is 130 miles or more. The worst you get, the most you're going to get clobbered for, 14% of the list price of the hybrid vehicle if the electric range is less than 30 miles. So basically, how much income tax you pay on use of a company hybrid car depends on the electric range of that hybrid. Alrighty, so what about standard petrol / diesel car? Well, most of these are going to be in what we call the 6% pool. So the 6% means that you're going to get 6% of the cost of that asset to be deducted against your taxable profits each year. So in year one, 6% of the cost. In year two, 6% of what's left, which is 94%. And then in year three, 6%. So it'd take a long time to get the full tax relief on a regular petrol and diesel car. So that's the corporation tax saving. Now, if you're the director, you're driving one of these things, the benefit in kind, the amount to which you pay income tax, all depends on the emissions, the CO2 emissions. All right. So the CO2 emissions, and there's a chart that HMRC have, and the more that is a gas guzzler, the higher the emissions of the petrol diesel car, the higher the benefit in kind, and the maximum is 37%, which is quite a lot. So let's take an example. Let's say you're the MD of your own company and you're doing very well. You think, I'm going to treat myself to a really swanky sports car, 100 grand, going to get the company to pay for it. But it burns through a lot of juice. It's not very CO2 efficient. Chances are you're going to be hitting that max benefit in kind. So yes, the company shelled out 100,000. Remember, the company's only getting 6 grand off its taxable profits in year one, but the individual is going to pay tax on 37,000. So it's get added to his salary, if you will, in terms of working out his income tax, this benefit, 37 grand, and pay tax on that. Well, that's going to take him, that's going to eat into all of his basic rate. So 20% of 37 grand is the income tax paid on that sports car. So you can see the theme here, that the more eco-friendly the car, the better the tax breaks for both company and for individual. Now, what about van? So let's say you buy a company van. Well, you get 100% relief in the first year on the cost of the van. If it's new or second-hand. Remember, the electric car, the 100% perk was only if it's new. The van, brand new or second-hand, 100% relief in year one. What if you're the driver, the director of the company, you're driving your company van? The benefit in kind is a flat rate, 3,960, rather random figure. So every company car driver in the land, company van driver in the land will be subject to this benefit in kind, 3,960, and you pay income tax on that. All right. So more beneficial from a tax point of view to get a van over a car. It's not going to float everybody's boat, but there you go. Now, the one thing you want to avoid, like the plague, is this next thing. Car fuel benefit. 27,800. That is a flat figure. That is, if your company, in addition to providing the car, pays for all fuel that you're using. So remember, this whole benefit in kind is to sort of looks at the fact that you're driving the company car for some personal usage, which happens. Obviously, you're not going to use the thing for business all the time, so you're paying a benefit in kind, tax on the benefit for private use. But if the company also pays for private fuel, you get stung for this massive benefit on the fuel, which is nearly 30 grand. So you need to do this. You need to make sure that the company that you are in charge of, your company, your SME, entrepreneurial business making your widgets, for goodness sake, don't get the company to pay for private mileage that you do. Yes, the company can pay for business miles, but for goodness sake, personal miles you need to pay for yourself and not the company. And yes, there's ways mechanically, logistically of doing that. Either you reimburse the company or you just don't get the company to pay full stop for private fuel. But this is the most onerous thing, and all of this stuff is the fuel benefit for private mileage. So for goodness sake, avoid that like the plague. You do not want that. Right. So just an overview there on the corporation tax and the income tax effects of company cars and company vans. Now, assuming you might say, well, Simon, hang on a minute, what if we lease? What if we lease all this stuff? We don't want to buy it, we're just going to pay 500 quid a month, hand it back after 36 months. Well, then that's completely different. This is all about the tax relief on the tax depreciation. If you are leasing it and handing it back, then those lease payments will be deductible in your profit loss account. So unlike this, where it's an acquisition that hits your balance sheet, for the lease payments, it'll hit your profit loss, motor expenses, and you'll get corporation tax relief thereon. Yes, for certain gas guzzlers, there is a restriction on how much relief you get, but by and large, all of the lease payments go through the tax, the P&L, get full tax deduction. And this bit is exactly the same. So company car, whether you are buying it, claiming depreciation, or leasing it, handing back after 3 years, choices of how you do it from the company's perspective, but for the individual driving it with a bit of personal use, it's exactly the same. This side here, the income tax, the benefit in kind, is the same regardless of whether the company buys it or leases it to hand back. All right, so just an overview there on company car and van tax. Hope you liked it. If you did, please do subscribe. And as always, I'll see you soon.